Welcome on board Dhiraj Singh, the CEO at SIS, and talk about how their performance has been. Dhiraj, hi, morning. Great to have you on ET Now. Dhiraj, excellent set of numbers for you. Tell me, what were the drivers for the quarter gone by?
So the growth sectors continue to be the education, the manufacturing, the healthcare. And there are new sectors that are coming up, like the data centers, the renewables, the GCCs. And we've capitalized on all of that. And our sales are at its probably one all-time high. In security, India security, we got 50 crores per month of new sales in this quarter. And keep in mind that this was the quarter where the entire labor code reforms, which is once in a lifetime event, is also happening. So while we are addressing that on one side, we are making sure that our momentum is strong.
Dhiraj, you're also coming out with a buyback of nearly 106 crores at 478.5 from open market. Are the promoters participating in that?
No, the promoters are not participating, as are the regulations also, and that continues to signal the confidence of the promoters in the stock.
What's leading to this buyback? Is it just to give the money back to the shareholders, or do you see your stock being highly undervalued?
It is both, and we continue to give back well to our shareholders, including this fifth buyback. We would have given 700 crores to our shareholders since the IPO.
The other thing, Dhiraj, I also wanted to talk about was your EBITDA margin expansion, because we have seen an uptick of about 21 basis points, and that came in despite a sharp jump in your finance costs as well. How sustainable does this margin trajectory look to you?
The margins for the facility management segment will continue to grow. We had given the guidance of about 6% by end of this financial year, and we are on track for that. In the security side, we continue to invest very heavily on the technology side for new markets like the B2C, etc., which are the markets for the future. But in spite of that, we are at 5.1% for India, and we will continue to inch towards the 5.5% to 6%.
Your facility management segment has grown at just about 8%, and that's sharply lagging what other verticals like security solutions are up to right now. Tell me what's driving the slowdown here and whether there is a turnaround plan in place.
In facility, we had been focusing on the margin improvement. So the rupee value for the EBITDA, that's been increasing at a much faster pace. And we have now optimized all our contracts, the low margin contracts, the contracts that were on fixed rupee margin basis. We have almost shed them away. And the next few quarters will continue to see good growth for facility management also.
Your finance cost is up over 42% on a year-on-year basis, Dhiraj, with acquisition-related costs in the mix already in place. Is it signaling more M&A going forward?
We are always open to M&A, and at any point of time, we are considering a few deals. But we have sufficient cash reserves, and we have sufficient bank lines to take care of that without disturbing our targeted net debt to EBITDA ratio.
So any ticket size, anything particular in the pipeline? Seems like you're already eyeing some new acquisition.
Yeah, too early to say that, but hopefully in a quarter or two, we should be able to share more.
Dhiraj, there have been changes to the labor code and the minimum wages. What is the kind of impact that you have seen for your workforce and the impact on the P&L for that?
It is a tectonic shift for the entire industry, and we are very happy about it. It's good for our employees because it gives them more stability, better security, and better pay packages also. It is good for our customers because it ensures better quality workforce and higher retention. And it is good for our company and industry also because it makes things far more transparent, and the revenues also has a slight uptick. This was the first quarter since we have gone to the market with the new labor code reforms compliance. And we've seen a very positive impact from the clients also. But I will not expect this to be done in a hurry. I think over the next 2 quarters, we will see this setting in for the almost 20,000 contracts and clients that we have.
And you are able to pass on this cost entirely to the clients, or the clients are pushing back on this?
No, the clients realize that it is not something that we are increasing the cost. It is a government regulation and they want to be compliant, most of them. At the same time, we are conscious that we want to optimize the cost for the client and we are bringing new solutions, whether by way of process or the technology, to help reduce the total lifecycle cost of the client also.
Okay. Dhiraj, the last thing that I want to check in on is the international security solutions vertical for you, because that's grown a good 31%. What geographies are leading this? Is this kind of growth rate sustainable, or is it just a, base case or base effect which is currently at play?
So the defense and aviation sectors are going very strong, largely in Australian market. The growth is driven mainly by the Australian market. And we expect to see continued growth on that side. But also the rupee rate has helped in the total growth percentage that you mentioned. Our focus is now to improve the margin side on the international, and next few quarters we'll be focusing on that.
Okay, good to hear that, Dhiraj, and good luck with that. Thanks for your time today.